is way too early. If I had only waited a few hours, maybe 24 hours or three. So, like yesterday when we went and then we dropped, I had talked to Alex. I said, I still, you know, I'm still so sure that we're going up, but we could test 39K. So when we drove it, I said, in case of anything, just call me. He called me at 3 a.m. and he's like, hey, we're falling. I was just, yeah, I woke up and I was like shocked. I was just thinking, oh shit, people have bought the sport bags because of me, and we're falling. And then I wake up, but because Alex also likes shorter time frames, guys, always, always, always,
He was your
always.
protector.
He loves shorter time frames, like 15 minutes. There's so much action that will go on the 5 minutes time frame. It could give you high blood pressure. Seriously, if you if, if you watch Bitcoin dropping from 40K to 39K on a 5 minutes time frame, you will sell everything you have. So
I was actually true because I called you and I was actually on the phone with Fabrizio, and I said Bitcoin is dropping hard, but I forgot I was on the 50 minutes or something. And he said,
that's
"Really? Does Faith have spots open?" I said, "I don't know. Well, are you going to call her or I do?" I said, "Okay, I'll And then I called you
yeah,
and I hung up and I was like, shit, it was the 50-minute time frame. I zoomed out and it was
yeah.
like nothing. I just a
And
few
I
hundred
woke up.
dollars.
Yeah, and I woke up and I had so much pressure because I thought we had literally gone to 34K. Seriously, I was just like, it's over. This.
But it was a joke. It was a joke. We did it for joke.
It was
I was
this
so
drop
scared.
or something. No,
Hi
what time
everyone.
was it? No, it was,
Hi, Fabrizio.
I was here
it was
recording, so we have a record of 2 hours for our friends, and we
Yeah.
have 2 hours recording of your previous analysis on everything. So prepare
Mm,
to be in the YouTube channel live, not live but
yeah.
recorded. We have 2 hours. This is the third hour on 3 minutes. I will not mount the videos because I don't want to spend so much time on that. But anyway, it will be available for all the community and the family. So I will
okay.
upload later, and this will be our first video from Alex starting, and second with Faith, more participative. Very nice. You did it fantastic. I had some work in the house, so very loud rumors, and I
Yeah.
stayed silent, but I watched at everything, and it was very, very interesting because I learned a lot.
Oh, yeah.
Okay. You did. You're like the master.
No, it's the master always learn from everyone.
That's
Anyway,
good.
that are something that we should talk about when you finish regarding the current market situation because it's time to buy Ethereum, but maybe to wait for confirmation on the next candle because we are going up to
Daily.
no weekly. I'm working weekly for Ethereum, and I want to take the
Okay.
bull. I want to take the bull run, and it seems that it's starting the bull run effectively, with the candle closing up the whole moving average of the 2 years. So I think it's a
Mm,
moment. It's a very important time to act on Ethereum. On Bitcoin, I think
I
it's
think,
not personally.
yeah.
Yeah, there you go, Faith.
No, I think that because when we closed the monthly, this is what I was saying. with the chart that I posted, I think Ethereum wants to outperform Bitcoin a bit.
Yeah, but
I
for that
think,
reason, I want to show you the chart because it's everything
yeah.
planned like the previous situation. So I wait for Alex to finish, and then I want to show you some charts.
I'm finished. I'm finished.
So I will share my screen and show you
Yeah.
some charting about Ethereum and how it is performing, and you will see that there is not so much gun lines and similar things, but just the performance of the coin. I think that you can switch the monitor to mine, and I will be there with you. I'm not sure about the recording because I'm recording the window, but maybe I will lose my explanation. In that case, no problem. We will go back again. Anyway, I will take out everything like the gaps, the whole moving average, and the normal moving averages just to show you one thing. Let's look at the daily time frame, not weekly, but since 2017. So as you can see, we have the same pattern. We have a big mountain here. Let's call that in a way that everyone can understand. We have another big mountain here. No matter to start so up or to draw lines at the moment, because it's just a matter of understanding the big pattern, the big time, the big analysis. So let's take out this price and this other one too. I will go there explaining step by step, but you can see that here after this mountain was falling down, and we can zoom and have this fall down. The dead cat rally that we had here 2 times is here 2 times too, but on another proportion because we have another price. So here we have that all-time low, all-time high here, and it could be a resistance for the future. So why not having this resistance here for the next fall at 1,500? Then we have the fall that we already experienced here at 1,700, and then the run. So it seems very little run effectively, but if we measure this price, we see that this is a 125% variation. So it's very important to consider this variation because it's consistent. And if we do the same on our current situation, we see that we are far from reaching the 126, which is at 3,790. So it's an important data to take in mind because this could be a move that Ethereum could repeat. Proportionally is different, it should fall, but for that reason, I decided to consider, first of all, this move. Second move, on a weekly time frame, which is very important for our consideration now because we want to do the correct entrance in the bull market, I will consider the whole moving average at 104 periods, which is practically 2 years, because each year has 52 weeks, and by 2 is 2 years of weekly moving average. So what happens when the bull market starts effectively? That the moving average, the whole moving average, cross down the price, then it cross down and it maintain the price up as a limit for the whole bull run. So now effectively we are crossing the whole moving average with this candle. So I will wait for confirmation on a weekly time frame, but we are very high and I would like to enter at this level. So I don't want to lose this opportunity just waiting the second confirmation. That could not happen because it could go green up to here and then confirm at the middle. So I would risk. For that reason, I mention always the stop loss. Enter and wait for going in pair in draw, but don't lose this opportunity because it's time to go bullish now. It's exactly this week. We don't have to wait for bears and bulls. Now we have to go for the trend, and this trend has 2
I
years.
agree.
Yeah, this trend has 2 years of experience, so we will follow this trend. We will not fight the trend because we will lose money. So it's time to get the last mountain here. If the situation will replicate, which is very possible, and I will explain them why, because Bitcoin is not dead and is going to get some surprise for us on November. But until the time, this could happen again. So I don't want to lose this little but not so little spot option, and I want to buy Ethereum now because I want to do the bull run with him, and maybe at this point I will activate my alarms and my other indicators to understand if it's going down to fall like in the past, or if it's going to outperform and go up, which is something that already did in this run. So it could be something like this, the next one, a minor adjustment here, a consolidation of the price, or a correction, to use Alex's words, and go against fates, and then rise up here again. So we could have effectively a price that is reaching 7,000 with no particular problems, and we have to stay there. We cannot lose this trade because at 7,000 we could have 30% of earning in just a couple of months. So it's time to switch for a bullish position on Ethereum. I was always quite bullish because it's never crossed the real moving average 200, and we never had a real dead cross on a daily time frame. If you search here for it, it was happening here, but these are the two moving averages, the 200 and 100 moving average on a daily time frame, and we never had the real cross. So this was always a strong bull market on a daily basis, and we have to follow it because we are waiting too much maybe on a daily time frame. We are waiting 5 days, and we had the retest here because generally to enter a trade you take the swing high when you have the retest, or when your RSI is confirming the move up. Let's add an RSI just to be conforming with the, not this one, but this one may be better. Or we can use the other one, it's good enough. Let's see. So the RSI, if I follow the RSI, I will not enter the trade because it's very high. But we can have the divergence, many other things that are related with RSI. So I think that now it's to trade with the market. So to know that the trend is going up, that the moving average is signaling up, and we had the retest here, we should have been entering here and follow up this way. So to me, it's time to buy. I think that I'm waiting for a 2,800 maximum for a minor. We have many wicks here, so it's something that could happen tomorrow to have a wick here at 2006 or 2,700. Write down these numbers because it should be some limit orders with order and cancel order to enter a trade the lowest possible. But I think it should be the moment. To me, I will enter this trade. The lower resistance here is now support at 2,400. We have way path until 3,250, and then just the resistances that were left from this run. So one here, another one here, but really already made, because in market making these are not holes at the moment. And there is a bull hole, and Apomatic we can see as an indicator to indicate when we have some kind of in example bear hole like this. We are already crossing that bear hole here. The bear gap is filled, but we have the target hit here. So we are hitting a target which is practically that these market makers already completed the phase up to here, and we are going up. And the last point to fill is here at 4,000. So it's time to enter this trade. Do it as you prefer. Use stop loss. We are a little bit late because this candle maybe was the right one or the other two, but we can think about 2,700 and maybe 850, like it's performing now on the next candle, with that technique in Binance that is order cancel order. So you put an order high or an order high, and then you wait for the order low and you enter for that. You can check on Binance order cancel order, and the other exchanger also are complying. So it's quite the same. Don't look too much at the RSI daily, because effectively it could be showing something that is not real looking at this proportion, because you see here that when we were at this moment, I was quite surprised of this price action move that was from 2,650 up to 4, and the RSI was quite on the limit of overbought, but performed quite perfectly. So consider that if you are scared about the RSI, because already happened and it was for a run of $3,000. So it's important to consider everything like this. I will not go on measuring Elliott waves and so on, because this is a macro analysis and help you to understand that here we have a double bottom if you need it. So we have a real reaction on the price, confirming this level like a strong, very strong resistance. We have the previous all-time high that is quite lower, but not so much. We have here a consolidation of the price that already happened, the market makers that are already, let's say, complying with their needs here. So the move is up. We don't have to search for so much confirmations and other things to enter the trade, because we could be late later. And we can consider that the move, if we want to forecast the move, in example, we could go for the really simple way that everyone could use to understand where we are going, because this is a real simple way of doing that, and reducing a little, going for the line up here and thinking about this kind of ascending motion. We are going to 10,000 maybe and more. But if we don't, and we replicate that little mountain here up to 3,700 or 4,000, we will be in this range, because it's a range of 60-70% of trading with no leverage. It's very interesting to do that. So think about it, chart this, just draw lines. No matter to do Elliott wave, Ganfam, I always have everything you need. If you want, look, I add everything I used. What you understand here? Nothing, because it's nothing. It's more important to do the simplest way initially, to find the support, resistance, price action, supply, demand, and so on, and to trade that range. Now it's a range to trade, because it is going up like a ladder. If we do Elliott wave, we can understand that it's maybe the big wave one is here. Now we will have the three, maybe correcting a little. For that reason, I said wait for confirmation. Maybe could be the right choice to wait to enter a trade now. But if you are thinking long term, here we have 1, 2, the third wave, maybe the fourth will be up to here, could be, and the fifth spinning up to 4,000. So don't lose this swing. Think about it, take your risk management in action, set a stop loss, but don't lose this trade, because it would be sad if you lose this trade. It's better you take it. Questions, ideas before switching to Bitcoin? No questions, no idea?
No questions. So
I think
Do you
I
agree,
don't have
everyone?
a
Because
question.
Fate generally is working with this kind of technique to trade supply demand and lines of resistance. I'm doing it macro because I generally like to trade 2 years trade, but taking profits on the peaks. And we will talk about it because I like to sleep. I don't want to be awakened by Alex calling me because Bitcoin is pumping or dumping. So I prefer a
Alex, feel
2 week
free to
trade.
call me anytime. Just just not when it's dropping on the 5 minutes, okay?
I generally prefer to trade a market, not a bull run or a bear run. So generally, I prefer to trade the market. And to me, from this point, when the market starts being interesting, up to this point is just sideways. But I can swing trade, of course. I said there's 5 minutes or 15 minutes time frame with moving averages, and I swing trade this. Why not if I want to do some extra cash? But the cash is here. It's not here. In this range, I don't have money. The volume on this sideway is not interesting. I like this swing. I like eventually the first of the drops because I never like to consider the drop of the second that gets reaction because it's too low. Look at this one from 4 down to 1,500. It's perfect to trade, but this one, not these ones, because they are not so angled. They are just risky lines, and especially on the mind control methods, they are very bad because you have a little up, a little down, a little up, a little down, and dancing on the trade is never a good thing. So especially here when we were crossing down the moving averages and going for the potential bear market, it was not something to trade. Maybe to risk some entry here and say, okay, Ethereum at 1,800. I like that price. I will risk my $1,000 here, and let's see if it goes to 1,400. I will exit at 1,750. But risk a little here is not bad, but remember that we are under the trend line, so we are risking also something that could lead us to a market crash to 400 or to fib zero of the perfect level of fate. So it's important to consider everything like this. And when you do macro analysis, don't be scared to draw lines that are not contemplated in manuals that no one is doing because it's something that is not useful. It is because this is the way that the product is growing, and I'm not using log scale. If I use log scale, it will be a flat line, so useless. I just want to do a macro analysis of the expansion of the price, because if you are trading ranges like you were talking about, this is a range that is expanding, but it's still possible to get on the low parts. I was surprised by myself because I had an old chart that I did on Ethereum, and I will show you that chart that I did about 3 or 4 months ago. If I find it, let's see. But you will see that it's just a macro analysis with no other things. Should be this one. And it's quite incredible how it's a chart that I didn't take again, but this red line I drew at that time. So imagine this little Scorpio, because it's a Scorpio, I call it a Scorpio, on Ethereum, and using the log scale, it is now exactly complying with what I was thinking. And how I did this? Just replicating these patterns with these others. I isolated these patterns because the market analysis is also a capacity of isolating patterns. Of course, I know Elliott waves, I know the cycles, I know GAN funds, every kind of regression. I know everything, but sometimes doing it easy and just plotting the shape of this Scorpio will give you the how much the Scorpio can open these two arms or whatever you want to call it. I failed on the correction wave. In this case, we can call it correction and not consolidation. But because it was done, I don't know when, but maybe here, when we were here on 14th of May. So on 14th of May, doing a macro analysis, I forecasted this. It's incredible. But not incredible because I am good. It's incredible because it was here. Not because I found it, but it was already there. So if you find this kind of macro analysis without drawing too much things or using here, there are no indicators here. It's completely virgin, a virgin chart, just some timelines to understand that here I have a replication of what it was more or less here, nothing to do with that. And these two are complying with an expansion. So I suppose that this will persist proportionally, moving this time frame here up to here or wherever. But seeing this kind of charts, I think that you can gain more confidence in your analysis because you don't have to bother about whoever knows which kind of strange tools. To learn the tools is important, but it's more important to have a strategy. And when you go for a market analysis in a big time frame or on a long time basis, you have to use whatever you want. Don't stuck with the Elliott wave because Elliott wave is good for swing trading. So for getting a wave up or a set of waves, but it's not good too much to do a market analysis because it's based on a swing. So this swing can go a little bit down, more or less, depending on the fear that people are involved when trying to sell or to hold the coin. So the Elliott wave will use Fibonacci and it's good, a nice wave, it's mathematics, but you can get the same results empirically using just lines, taking the logical hit here 2 times. This is a resistance for the future, and it was a nice support if we go there again, so we can bounce again. If we go down, it's a resistance and so on. Just drawing these lines, and then we can go deeper on the golden ratio and whatever you want in mathematics, and we will find the nice entry point. I have to chart that entry point probably today. I do that later with more details and tools, and I will share you. And also, we already did that because it's already in that chart that is completely incomprehensible because you cannot understand practically nothing from that chart having so much lines. But here I will have my answer. If I go and I zoom on this kind of chart, maybe I will find that in GANFAN I have exactly here at this point. I mean, it's 2,744 my entry for the trade. So it is important to do this, but looking at this, it's very nice. I could do a shirt, but really it's something that we can use later. The macro view of the market, of the whole market cycle is important and more important than this. Then let's switch to Bitcoin if you don't have more questions. I will wait for confirmation. It seems that There are so many mute
That's
people.
Good evening, Fabrizio.
Good evening. Good evening.
This is Evaldo. This is Evaldo speaking from Holland. I'm new
Okay.
to the group and to crypto, and I was wondering where can I get the visuals of what you're explaining?
What are the visuals? The technical charts?
Yes.
So you want to have these technical charts? It's already shared. I can give you the link. It's something that I will publish. I'm sharing this one, so you can have it shared. And if you want to do your job, just you can follow this link, and then in your trading view you will make a copy, a local copy, and in the layers and object tree you will have everything about this chart like I have here, and you can just hide the parts that you are not interested on, and keep going with the analysis and share with us, because I generally do this with Alex because he is doing more of the technical analysis on the channel on Telegram. I also did just XRP, but I have TRX and XLM ready to be published later. So I can share this one and also the Bitcoin one because it's nothing secret. And when you make a copy, you can have more, because if you go in the object tree after making a copy, you will see that I have many symbols here. So in these symbols, I have Binance, Ethereum, USD, Coinbase, many other analysis that I already done on this chart, saving at this point Ethereum. So you just switch the chart and you will have more things like the total market cap. In example, I have here the analysis of the crypto market cap with the same approach, with the gaps of the market, with the moving average, the lines that are related to support and resistance. And you can just go here on the layer and it will be everything present as a macro view. The other can be Bitcoin, which has another link, as you can see here, and it has also other symbols, because here there are more symbols also with stocks, because I did some stocks analysis on this BTC saved chart. So I can share everything like this, and we can talk if we need to define details on how to use this kind of charting. I don't know if you were referring at this kind of sharing or difference.
I appreciate it a lot, and I'll definitely take a look at it.
Yeah.
But I was referring to as you're talking, you're showing us stuff, and where can I see what you're showing us?
Okay, in the channel of YouTube we will publish this. But at the moment, since we are just starting, this is a big family because we are many members, about 300. And the YouTube channel is still empty. If I show you, we have nothing there. This is the YouTube channel. And with Alex, I'm talking to start putting content, but this just a test video here. So I will put the today contents that are related to the two videos I already saved or recorded from the previous session that the guys had. Now I'm recording the current, but it will be something to be cut out because we are talking about these details. But I can leave there for the family and to go to share, to search for the video. I will try to put the right title, and you can go there. Then regarding technical sessions and contents that are organized in a way that I can do this analysis in 10 minutes for offline recording, and do it for me and for you and share, give me some time, because I'm also planning to do things that you will enjoy, everyone, that are related with algo trading. So I will show how a bot works, how you can, in low level, program a bot. But if you don't want to program, how you can use the bot, how you can get the signals in Telegram. Like I have some bots here that are testing, were test for some kind of trades. So how you can have a bot saying, I'm buying Monero for this amount and this kind of rate and current rate, and when it exits, it will give you the sell-off. Here I did a manual sell, so just to experience how are the losses. Here is the performance table. So I want to show you many things, and I'm organizing everything like this in many, let's say, cycles. So at the moment we are doing live session and trying to record them like this one and the other previous two, to give you the opportunity to have maybe too much time, because it's 1 hour, but I cannot stay each 15 minutes hitting the stop button, because it will be something very hard to do, and it's something that I do for us. So at the moment we will have some contents to start having some hours of milestone that YouTube is requiring, because we have some projects. The channel is not mine, but it will be used for future goals that we have with for the whole channel. So for the whole Telegram channel. So just be patient. And effectively, if you have some doubts or if you want to enter a trade, or you want something to discuss, consider that we are always on Telegram. I'm joking on Twitter because I'm publishing some stupid things like Bitcoin at 1,400,000 at the end of the year, and other things like disasters. But if you look at my Twitter, I'm joking, but not just joking, because, in example, I published right now what was the situation, in my opinion. I will show that to you. What was the situation, in my opinion, time ago? In example, this is July 26th on Twitter. Without entering many details, look at this image. I already said 48.50 as an option, and stay on this range 42. But I don't like Twitter because I receive questions like, are you bullish or bearish? I'm both. If the trend goes up, it's like, for that reason, I say Bitcoin, because I go with the customer. The customer is my trend in my coin, and I go with that because I need to have money. But I don't like to trade the whole, the little swing like this one, because I don't want to stay awake during the night to see if the trend is going up or down. I prefer to trend a swing like this one. So from down 28 up to 50. And if it's not possible because it's very manipulated, I prefer to wait. So I prefer to consider these options on July. So not because I'm a witch or a forecaster or fortune teller, but because it was written in this analysis of the trend using other components and other indicators, on the trend reversal, which is another one that we use generally, on the support that we had, so the landing zone, because we know since about the previous market that we will go to 22, 27. For market makers needs, they have to realize money they left here in the previous run. So it's nothing unknown. And if you look at the other, look at this other, I started when the run started here with 5 options, because there were still 5 options. This was an indicator named the Keltner channels that I use generally to understand when the market is crashing. And here I was having a breakout on the Keltner channel, while the previous bull trap was not the same reaction. So here I said, I will not enter this trade because it could go down in a minute, but I will take an eye on it and eventually enter a long on Bitcoin at 38.40. But I don't like Bitcoin, sincerely, to enter trades. I prefer to enter a trade when we are at 25, 22, which could be a good trade up to 100, rather than going for this up and down. Because this up and down, I don't like it. It's money loss. You have to exit here, enter again here, or if it goes up, you will lose the train up, and so on. Many words that people are using, like lose the train. Here we don't have trains. Here we do money, and we have to adapt our strategy to the market. So we cannot consider to lose or take a train, but to enter a trade when it's nice. So this was another option that I published on July 30, because I was, as you can see, I don't chart technically for people because it's useless. They will not understand GAN and many other things that you can use. We were still here at 39. I saw clearly this kind of retest on this trend line where we are exactly now. And then if we break out, it will not, it's very hard that it will go the same angle here because it will lose the impulse and it will slow down like it did in the past because it's based on past data too. This is a simple diamond pattern that I'm using just on a macro way to say this pole will replicate here because it's how we trade a diamond and how Elliott wave consider the ABCD pattern when being a diamond for the waves. So I just did this, and then I said, well, if we go this way and we hit the resistance, the main resistance here up, we will fall down. This will be a diamond, so the diamond will have the same pole, and we will go down to 26 or maybe 22. And this was done on 30 of July, not because I'm good, again, but because it was written. And the last one, maybe this one, is this other. I said to all the people, don't trade this kind of risky area because this is a resistance we never tested or during the whole ranging channel here. We broke up this resistance in February with a straight move. So here we don't have practically market, and it fell here very hard. So games here are done. What we have here is pure price action going on the trends, on how the market bots are performing, and especially on the fact that we have to consider another thing. It's not just Bitcoin driving Ethereum, but when you trade, and it was done for about 4 years, Ethereum on a Bitcoin pair, you are giving strength to both. So now that strength that Bitcoin acquired in the past from Ethereum is driving up the price on Bitcoin. If you want to look at the reason of this anomaly, look at Ethereum, because it is the anomaly at the moment. So I said on 30 of July, if you enter here, prepare because it could fall here. If you want to wait and swing this trade up to here, do it, but consider that then this sin wave that we have here will retake the impulse. So we can have on a sin wave that goes up and the price goes sideways or down, but we generally we have a recall. So as you can see, the sin wave drove the price here, then goes up and here lose impulse because there was no volume, then it pushed down again here, meet the coordinates of the previous real resistance, and spin up with the whole wave, the complete upward move that is very similar to this one, the first entry. So if we have a first entry or this entry, we could go up here like in the past. We go for past data too. And I'm using a chart that I don't have at the moment because it's something that I published on July 30. So as you can see, my point was to consider that everything can be forecasted in different ways. And I will share all of these analysis, but I will not use a single method. One day could be a macro analysis like this one, which is based on supply demand, support resistances, gaps of the market left from the market makers, the real trend line, the moving averages driving the market. And another day could be that Elliott wave and similar things to combine and to give you a wide idea of entering or not a trade. And I'm not scared about saying that I will enter this trade because, as I show earlier, this blue line is pushing up the price and I will not lose the opportunity. If I go to 1 hour, I already considered the waves that could be of my interest, and these are the waves. So on 1 hour time frame, I consider that I could have a nice price at 2,840, and I'm waiting for that. Not a problem to share. This is an harmonic pattern, a W, which is produced by another similar pattern here down. So it's a second wave similar. Here was a diamond. You can see that you can study the price action here like this one. We have one, I have the keyboard, but it's Alt H to have a fast line like this without going there. But so we have the diamond here. This entry point of the diamond was a pole that I will use more or less this way to know how I will go in the future. Then I have a formation of this W, so the same that I'm having here. Generally, we have swings that are lasting 1 or 2 of the same when you have harmonics that are like this W and this other one. So it is very possible that this same pattern will then replicate here on this zone and in this zone. So I will expect that. But now I want to capture that. I wouldn't say perfect entry point because I could be wrong and it could start pumping up. I didn't use Fibonacci. I should apply Fibonacci here with a retracement of the wave starting from the first one, considering that this is the 5th, 4th, 3rd, 2nd, 1st. So I have a reverse. I should go for Fibonacci from here and try to understand that here I have the 1, so I could go down to 0.786, but I also could do the reverse of this wave. I'm considering the ascending one. It's a bid that you do a sort of bet. You have many combinations, and also adding the GAM fan that I already drawn earlier. Here we have many things, but considering the GAM fan, I have this line that is from the arc of the GAM fan that is right here. So I would trust GAN also down to here. So I would trust up to 2,750. And maybe if seeing that this downline is going here, and I have a first confirmation of my GAN drawing correct, I will wait for this and this other, and maybe having an order placed on top of this, because what I was saying yesterday also when talking, there are many people that sadly when they are trading are saying, I lose this opportunity. So I've lost from 1,700 up to 2,800. Well, maybe you have lost that, but you slept. You didn't had your money in the trade. So if you look with me at the real trade that is going up to 10,000, you just lost $1,000 on one Ethereum, but you didn't lost. You simply don't trade Maybe you traded with the $1,000 on another pair and you get money from that. So if you do that well and you end up safe trades or trades that you consider that, look at this one. I always mention one entering here at 189 on 27 of April 2020. I mean, after the COVID crash, entering here and leaving the Ethereum there up to 4,500 is not a good trade. I think it's the best one because you sleep a whole year. Maybe intelligent people would manage the trade this way. When you have a high like this and you check your indicators and you see that we are on a RSI that is falling, you exit the trade here, not exiting the whole trade, but just taking the profit. So if you are earning 50%, you take out your 50%, you leave your assets as you bought in quantity, and you get with that 50% that you gained here, you enter again here and you consolidate your position to earn more at this point and exit here with the whole profits or with the whole spots because you know that this is going to fall heavily. Generally, to leave a spot that you bought at 90 or at 100 or 200 or also why not here at 600 or 700 for the whole market is nice because, okay, you are losing here, but you took profit. You took out what you earned from this investment. If the price goes at 90, I will take the last $200 profit because I don't want to risk to go down and I want to take some profit too. But if not, this position will be eternal for me until I see 900. So this is a way of optimizing your trade and to sleep well without swing trading. If you want to swing trade with futures and leverage, it's another thing. I will never look at weekly for that. I will look at 5 minutes of 15 and you cannot trade a good trade for a long time. Here you are searching for 20% not leveraged that are 100% leveraged by 20 or by 50 up to 200 leveraged, but your risk management should be completely different. So this is something I like to share because it gives you a logical view of what you already thought in your mind when you're sitting in a chair alone, thinking to the investment and thinking. But if I leave that there, holding is not a good way of doing an investment because holding when it's going down is just like the guy that is crying because he failed and is holding, and everyone is saying that they are holding like the Doge community, but they are holding bad because they should have been exiting on that loss. If you buy Doge at 0.6, you exit at 0.58. You don't stay at down 0.18 because it's too much. You are losing money. I know that that coin will go to $1 for Doge. But look at how much time required for Ethereum after the big bang here. From 2018, 3 years to get a decent price. So I don't want to take my investment for 3 years blocked in a position that will be maybe 100%, but I will come back later when it will pump a little bit more up and maybe I will not gain the 100% or 200%, just this 50%. But meanwhile, in 2 years, I would have been playing with more money in investments that are short term for that kind of goal. So I think that this could be something also to be shared in the channel and not lessons, but just sharing because I'm not teaching here. I'm just showing how I do since about 30 years of investment. So not just on crypto because I like the other markets too. I like the Forex. I like everything. And I'm not rich because I always gift my money. So I give away everything. I'm not an example for that. I do too much donations. But you can earn money here. You can earn good money in various ways. And thinking about long term will give you the time to have your investment growing in 1 year, and you will learn Elliott waves, and you will learn strategies and trading ranges. Why not? But if here we have something that starts from 1 month, I don't know if many people will use a 1 month time frame. I do sometimes when I start a big analysis, because it's a good starting point. You do monthly, and you see that monthly you have completely other lines, but you have to consider that on monthly time frame you have to track the weeks, while the weeks are on a daily time frame something that is market manipulation. On a monthly time frame, this doji cross of the Ethereum pump and dump for this one is indicative, because you know that it's volatility. You have many volatility, and you can also adjust these trend lines to be a macro trend, and you will see that they will not touch the charts like we did earlier, but they will be a little bit more higher or higher or lower of what we are generally used to see. And you can play with this, is starting from monthly and going then to weekly, and you will get familiar with these assets. So you will understand that you will spot a pattern here, and you will say, it's not right, a similar pattern, because I have here some hills and so on, but come on, this is the same wave, the same move. So, and now I am exactly on this second move that is here. Could be something that will stop like that one here at 4,000, or will keep going up. We will discover that, but we have this one. So at least 126%, I will set as a limit, not real limit, not something that is low and God mode trading, but as something that already happened. And when you see and you hear people that are saying history never repeats, well, I trade since about 30 years, and history always repeats on market cycles in different proportions. So it's not true. History will never repeat, because we will never have the same price on a different time frame or a different day, because the day will never repeat. But the pattern is what we study in this function, because a geometrical point of view, these are functions. We see these as candles, but if we go for lines, and you are a mathematic man or someone who remember something from the school, the high school or calculus, you will know that each point of this function has a derivative, and each one of those identify a direction, because the derivatives in calculus are points identifying directions. And if you study the 2 points of that function, and you can also go for calculating the area that they are intercepting, so you are integrating or using integrals, you are applying advanced geometry at calculus that are also included in sacred geometry from Gann and many other things that you can effectively consider as mathematics. So we are not playing with just patterns and big, let's say, big lines and standards or shapes. We are also playing with mathematics and advanced geometry on a real 4 dimensions, because we have, let's say we have 3 dimensions, because we have the length, the height, and the time. We don't have the deep of a function, but I would not be surprised to start thinking about a market like a deep, a z-axis with the market sentiment. Never one had that approach in macro and microeconomy, but you should think about that, because we have the price action, which is going on X and Y axis, so it is interceptable by 2 points, and we have the time, which is our in this case, third dimension. But time is always the fourth dimension. So for us, that Z that is lacking could be the market sentiment, and it is. So you have to think about this printed line in two dimensions like something that has a heart and depends on people. So we have the deep of this line. And there are relationships in the whole market that cannot be left aside between assets that are historical. In example, we started the market with Bitcoin, but after Bitcoin, we had Ethereum and some minor altcoins that were traded just on Bitcoin pairs because there were no fiat. So the total market cap now is representing what was the Bitcoin dominance that is not that way anymore. But why we used to call Bitcoin dominance? Because the intrinsic value that every coin has when we traded that coin on the Bitcoin pair 2 years or 3 years ago when there were no fiat on exchanges, it's still there. And the interesting thing is that now we traded for about 4 years Bitcoin, Ethereum Bitcoin pair, and both Ethereum and Bitcoin shared some of that intrinsic value. So if Ethereum is going up now, he is effectively driving Bitcoin up. So this anomaly, because this is an anomaly, this is Bitcoin. So let's consider Bitcoin. In this case, let's get rid of this regression trend for the moment, because it's an advanced tool, just using lines, and also the time analysis is not important for us. I could get rid of that too. But I have something here, which is the moving average 200. This is a very important resistance. We cannot think about this like something that Ethereum could help Bitcoin to get rid of that. This is an important 44984 at the moment, but today it is at, let's see how much we have the moving average here. Today it is at 44794 floating because it's a line that is completely updating. So this is an important line that is resistance. Never follow people that are telling you that crosses and moving averages are price laggers or indicator of price lagging. No, it's price action, not lagging, because price is not lagging. Can go up, down, and went wherever sideways, but it is performing as a price action. So these are indicators that help you on a time frame to understand where the price should be and where it is not. So for 200 days in this case, because days, 200 days moving average, for 200 days, the average price should be at 44747. If it is not, and we hit that price now, we will have a resistance because that is the price where it should be. It shouldn't be at 48 for 200 period. And if we increase that period, because we can go for 208, which are exactly 4 years of the moving average. Look at this line that is lowering. So for 2 years, this price is effectively overpriced. It should be at $200 less. To understand these averages, because they are just averages, they are a mathematical formula. We'll go deeper again another time, but they are an average line. So at the moment, I will go for the Bitcoin explanation now, but I will stop the video because we are at 1 hour and start start another one for the upload to YouTube. So meanwhile, you can ask me questions.